He thought, hey, I'm trusting my accountant. I've had him for many, many years. I've got a really great relationship with him. He must know what he's doing. Came to me a couple months later and asked me how I can help him to potentially look at taking out some equity. To his shock, he found out you cannot take any of that equity out unless you were to sell that property.
Yeah. Today on the Smart Investor Show, I'm joined in the studio by someone who truly understands the finance landscape for property investors, Katherine Stephens from Entourage Finance. Katherine brings over a decade of experience in the financial services industry, having worked across retail, corporate, and commercial banking, as well as finance broking. She's held key roles at CBA and the Australian Lending and Investment Centre, and today she's a finance broker with Entourage, one of Melbourne's most trusted names in the space. With the Bachelor of International Business and Finance and a Cert 4 in Finance and Mortgage Broking, Katherine works closely with investors, business owners and expats, helping them secure the right lending structures and navigate complex finance strategies with confidence. Beyond numbers, Katherine is passionate about guiding people towards financial clarity, building long-term wealth and turning goals into real, tangible outcomes. Oh, and when she's not structuring deals, she's enjoying great food and wine or hanging out with her two Frenchies, Pablo and Dante. Kat, welcome to the Smart Investor Show.
Thank you, Julian. Thank you for having me.
Great to have you on. And I know there's lots of nuggets you're going to share with our listeners today. I normally like to start with sort of going back a bit, getting a bit of the Kat story and understand a little bit about your background, childhood, schooling, whatever you'd like to share with our audience.
Lovely. So as a kid, I actually started off wanting to be in international business. So I started doing an international business degree, thinking that I wanted to travel and be in the middle of different trades and businesses and selling different products in that sense, because I always watched my dad do that in the past.
I was going to say where that influence comes from, right?
Yeah, I watched him do it all his life and he loved it. It was his dream job. I could see that obviously it had made him really, really successful. The work ethic, I saw him work long hours every single day, coming home late at night to us, but I could see that it made him so happy. So I started studying at RMIT in Melbourne and started doing international business and met someone. It was actually another student at RMIT. He was so happy and I was like, what do you do? And he's like, I'm actually a branch manager at a big yellow bank. Yeah. And I'm like, okay, tell me more. And he would tell me about what his daily activities looked like. And he just seemed like he loved his job. So I was very curious. I wanted to know more. That night, I actually went online and tried to look for roles at the big yellow bank. Yeah. And found a role at the Chadstone branch, which is about maybe a couple of minutes away from my house at the time. So I thought, might as well, let me see how this goes. Years ago, I remember Dad used to always tell me, you should go and apply at the bank. You know, it's a good job to have. It's a secure job to have.
You never lose your job, yeah.
And my impression of the bank was walking in there as a kid with Mum, waiting in this long line to go right to the end to be able to put your cash in to your account. Yep. And I was like, that's what old people do. That was the impression I had. I didn't know what was actually out there or what bankers do and all the different departments that you actually have in there as well. So found this role, applied for it, got an interview the next week, went through this whole group process, got the job, started working as a teller, made my way up into a personal banking role, then into management.
At the branch or you moved into head office now?
Right. At the branch. So I spent a few years at the branch, learnt my way around everything. My manager at the time, I followed her through a few different roles across the years while I was at the big yellow bank. And she used to ask me when I was first there, she was like, what do you want to specialize in? And she brought out all these brochures of the different business banking. You've got financial planning, you've got wealth management, you've got, international or home lending business. Yep. There's so many different areas that you can really go down, right? And I said, I want to know it all. And she's like, you can't know it all. But I'm like, but I'd like to understand everything. So when I'm having those conversations with my clients, I can give them a holistic approach as opposed to tell them, hey, you need to go here for this and here for that. I wanted to understand it. So I've read every single brochure and I knew it all off by heart. And that's how it started. Really enjoyed my time at the branch, but there was this one moment where I realized that there was more and there's something else that I can start off in. And that's when we actually decided to go online. She's like, look, I'll support you. Went online, found a secondment that actually bridged the gap from the branch land into the corporate space.
Yeah.
at the bank. And it's really hard to get there, right? Because your experience, you're starting off.
A totally different
scratch.
unit of the bank, right, as well. Yeah.
Absolutely. Yeah. And so I managed to get myself into this secondment, which is fantastic. It definitely fast-tracked my career, I'd say. Spent a few months in corporate as an account manager, working with businesses turning over millions and millions of dollars, helping them structure their finance and seeing how the really wealthy people in Australia structure it to leverage it to actually take them to another level. And then in there, I was like, okay, great. This is really good. I want to know more. What else can I do? Got myself into a commercial relationship management role. And that way I could actually start managing these clients. I could start actually giving this kind of advice and structuring and working with different partners to help them get to their goals. I've realized that I knew all of this commercial lending at that point in time, but I had no idea how to write a home loan.
Right.
So I went backwards a little bit.
Because in the branch, you wouldn't have been exposed to that, right? Because you're more on the
No.
transactional side.
Exactly. I was on the transactional side. I was working with a lot of businesses at the time as well.
Yeah.
And then management and working with people, but never really did the lending side of things.
Yeah.
So I got myself into a role which was in essentially premier banking. So working with high net worth professionals, medical business owners as well. And the goal was to actually use all my knowledge that I had learnt in corporate and commercial space to now pull over all these clients that might not actually know that we even have those options at the bank, and work with them to actually take them to the next level from a pay-as-you-go role into a business role, and then to see how we can, help them purchase an owner-occupied property or an investment property within their business, and looking at all these different options of there's so much more to just buying a house, living in it, paying it off, and then retiring.
And were these high net individuals or large businesses?
Yes.
Right. So you were a personal, what was your, was it like a personal
essentially
banking?
a relationship manager.
Yeah.
So relationship management meant that you were looking after all of their banking. So all their transactional, all their lending, whether it was working with financial advisors, whether it was working with corporate banking. And then it hit me one day because I had lost a couple of transactions. And the reason why I lost the transactions was because I didn't have access to the options at other lenders.
Yeah.
And I told the clients, go for it. That is so much better for you. You should definitely take that deal. It's going to work in the time frame that you need it to work in. It's going to give you the amount of money you need, and it's going to give you the best, most competitive option as well. So it makes sense for you to take it.
Yeah.
That's when I realized I need to start exploring something outside of the bank. And here we are 3.5 years later in the broking world.
Yep.
And I'm able to help clients holistically. I can give them so many other options. I'm looking at their best interest duty, which is something that we as financial brokers actually abide by, right? And you've got the option of major banks. You've got the option of digital banks. You've got second tiers. You've got non-banks. You've got private lenders. And you've got access to all of this to be able to provide your client with the most holistic service possible. You've got the ability to work with accountants, with buyer's advocates like yourself, and really just be able to take them to the next level that you really couldn't do when you were at the bank.
Yeah, no, it's really impressive because it's something I've noticed with having your relationship managers at the banks. No one's ever asked me about investing in property. Obviously, that's what I do for a job. I buy a lot of property, but no one's ever come to me and say, hey, why do you want to take some money off the table and do that? That's something I would do because I understand it. But it's interesting that you learnt that in the early stage of your career.
Yeah.
And then putting it into place now, because that's a really interesting point about building the strategy and not just being transactional.
Exactly.
Which is actually what we find, because we see a lot of brokers, because majority of our clients will come to us through a referral or of their friends or through other associates with finance.
Yeah.
So the ones who might come through social media or other aspects, if they don't have finance, we kind of see how they may look for finance at a bank, or we might refer them to a broker as well. But it's interesting to see how they different work. And I know I've had some really bad experiences with just a bank broker because there's no real, I found, passion and, really owning that customer.
Yeah.
So, for example, I remember once we were settling and the broker went on leave. No one knew that.
Yeah.
Went for 4 weeks.
Yeah.
And so we got there and there was no one to help us. And the manager said, oh, mate, I'm really busy today. We can't settle this today.
Yeah.
Which obviously we blew a stack over it and got it done. But that was something I really noticed, which would never happen when it's your own business.
Exactly right. And that's the thing. I myself, being at the bank for 7 years, I moved into 7 different roles over that time.
Yeah.
And you can't keep those clients, right? They're different departments that you're working in as well. And I was like, how do I still work with my commercial clients that are earning X amount and also work with those first home buyers that might be their family members that they've referred me to?
Yeah.
But I couldn't do both at the bank.
Correct.
Because you've got different...
have to let them go. Yeah.
Correct. And so as a broker, I am able to help those first home buyers get into the market. I'm able to help those first home buyers get into their first investment property instead, and maybe look at a different strategy perhaps. I'm also able to help those business owners that are looking to expand their business, or they're looking to buy an owner-occupied property for their premises within super perhaps. You've just got so much more access.
So talking about strategy, what is it, something that you would put in place when you see a new client come on board? So it's for a referral. I assume it's a lot of your business comes through referrals.
Absolutely.
How do you start that relationship from a strategic point of view for their finances?
What I like to do is I'll generally send them a link to complete all of their assets, liabilities, expenses, income. And it sounds like a lot, but the thing is, when you have that first conversation, if you can have all of that in front of you, that half an hour, that 1 hour that you have with the client, you can maximize that time to actually talk about the strategy and the structure.
Yeah.
As opposed to asking them when they started their job, how much cash they have, what their income is, how much they're paying for private health insurance. All of that is information that as a client or as an individual, you'll have that at the tip of your fingers. It might take you 5 to 10 minutes to complete that yourself. And that way, now we've got the ability to focus on what you're actually wanting to do and why, and what the next 5 years looks like, what the next 10 years looks like.
So you prepare that client, you prepare before they arrive or before you have that meeting, like Zoom these days.
Yeah.
Prepare that outlook. And then they might have an immediate need, I assume, like I want to buy a family home is probably the most common, or I may want to look at investment.
Absolutely.
And then you can break that down with their business person. You can talk about that as a future discussion as well.
Absolutely. And that's the thing, right? A lot of clients generally will inquire with a broker with the intention of already knowing what they want.
Right.
And knowing how much they're wanting to buy for. They have an idea. They've had a look at properties most of the time. But I like to take that to the next level, and I like to question them and challenge them as to why they want to buy an owner-occupied property, why they want to buy an investment property, why they want to buy in a particular structure without obviously giving any advice. Yes. And this is where the entourage comes in, right? We like to use different advocates, different kind of specialists in the area that will actually help you make that decision. As a broker, I can give them the finance strategy and structure, but it comes in line with what the accountant thinks. It comes in line with what their financial advisor might also think, what their buyer's advocate might think. And we actually do joint meetings with all those parties involved to make sure that that strategy has been looked at over and over again to make sure you've got the best possible outcome for the client at the end of the day.
That's great. So, having those we always talk about building a team of experts as part of your team, particularly in finance. We often say property investing particularly is a game of finance.
Yes.
Because if you don't get your finance or you don't have access to finance, you're not buying property.
No,
so
you're not.
It's a really important part to have that partner. And it sounds like at the Entourage, you build that partnership up.
Correct.
Bring in, a lot of people must talk about all the time. We hear about, should I buy in a trust?
Yes.
The other day, someone talked about, should I sell my personal properties and put them in a trust? And the only reason he asked that question, because he heard it at the barbecue. Didn't understand the amount of money that's going to cost him. And there was no actual reason for him to do it.
Yeah.
But meaning he would still able to get finance.
Yes.
Normally people think, I can get more finance and buy more property.
Correct.
So it's normally a vanity metric we find. Like, I've got to 4, I need to get to 6.
Yeah.
I want to be in the top 0.9% of Australian investors, right? Yeah. But they'll just spend that money not knowing, not speaking to their accountant.
Correct.
Not understanding capital gains tax implementations.
Yes.
The depreciation schedules they have to be put back onto the price.
Correct.
It's now based on the value of the property today, not 10 years ago when you bought it.
And the stamp duty and the taxes that you need to now pay.
Yeah, it's a bit mind-blowing why people do it. It's like, well, asset protection, but you're a pay-as-you-go earner.
Yeah.
Do you need asset protection today? I
just find that it's so important to make sure you're having these conversations before you buy, not after you buy. You have to, if it takes 6 months even, and at times it will, right, to make sure you've got all the right advice, to get all your ducks in a row as well, it might take a few months, and that's fine. But I'd rather you take 6 months to go and buy that property than to look back in 3 years' time and say, why did you not give me all the options that were potentially available for me?
So it's interesting you say that, because we had a client at the moment who's looking to buy the family home,
Yes.
hasn't actually got the finance all in place.
Yeah.
Found a home very quickly, first weekend, fell in love. And now there's this mad panic
As they
on
do.
trying to get it done. And it's like, hey, we just have to play, the game here, and we'll put in the offers back and forth. But we need to ensure, that the agent will say, hey, can you do unconditional?
Yes.
Well, I don't want to give my cards away and say my client doesn't have finance, but we have to play that game with the agent as well.
Yeah.
But, just trying to get those ducks. So you would actually say, hey, client, let's get a few of these ducks aligned, because most likely they come to what happened with me, right?
Yeah.
We go to an auction, we win, or we go and bid and I start negotiating offline, but actually don't have the finance up and running.
And that's the thing, right? I'm a massive advocate. You need to have a pre-approval. And not just any pre-approval anymore. You need a fully assessed pre-approval. A lot of lenders to maximize their efforts on their end, because not all pre-approvals go ahead. So they need to try and use their time on the ones that will actually go ahead. So they've now organized computer assessed pre-approval instead, which means that a human hasn't actually looked at your income. They haven't looked at your bank statements. They haven't looked at your expenses, nor the risk of, your income or self-employed income. They haven't looked at any of that, which means that you could go and say, hey, I have a pre-approval, and show them your fancy paper, and you might actually not be approved.
Right. Wow.
Which means you can go make that unconditional offer, and there's still that risk that you might not get finance.
I see. Yeah. Yeah. I mean, we see that every now and then. I mean, we're normally not pushing to that extent when investors.
Yes.
95% of our clients are investors. But this is a homeowner, and, the emotion kicks in.
Absolutely.
And that's where we're, obviously saying, just take a deep breath. We're going to work the process. Everyone's playing a little bit of a game, and the longer we can string this out, the broker's going frantically to get the finance sorted.
Yes, and look, that's the benefit of having yourself by their side.
Yeah,
because they do get to have someone that takes out that emotional factor when it comes to buying a property. It's a family home. Naturally, you're going to have emotional experiences, right? You're going to want to pay a bit more, even though it might not actually be worth that much, or there might not actually be another buyer there.
Yeah, and that's what, I reckon if I wasn't sort of just tempering him, and the broker's been quite good as well, just calming the farm, he probably would have gone and said, unconditional, waive all my rights and just get the price done. And anything which would have been potentially, we still run the risk of missing out on this deal.
Of course.
But we have to go within the guidelines that we have.
Absolutely.
And be careful not giving it all away, because, I think his issue is his statements, his business statements. So he's a business owner. His income has doubled. Yeah. But he can't show that because he hasn't done his tax return for the year, obviously. Yeah.
Absolutely. And look, there's ways around that, right? There's so many ways around it. There's so many lender options out there these days. As a business owner, even if you're within your first year of operating, you can still get finance.
Yeah.
There's different lenders that have different risk appetites that will still be able to look at your finances and say, hey, based on your, income year to date, we will still give you X amount of borrowing capacity. But the thing is, it takes time.
Yeah.
And it's really good to have that strategy and structure in place before you even start looking. Because once you look, you're going to find that house that you really want. Naturally.
Yeah. And that goes back to the planning. And like you said, I think we talked about building that team at the beginning.
Correct.
Instead of panicking at the end, and then you can make mistakes.
Yeah. And look, it includes your conveyancer as well, your solicitor. You want someone that you've already built a relationship pre-finding a property, have them on board. If you've got a really, really tight timeline, you can say, hey, I've got this contract. Can you review it for me quickly?
Yeah.
Whereas if you haven't planned that and built that relationship already, they're not going to be picking.
Yeah. And that's exactly what we did. We had to get that done and pre-warn her on a couple of special conditions and things like that we want to her advice on. Yeah.
So planning is so important. Building your entourage from day one is so important as well, because without them, all of us are doing this on a daily basis. It's our job, right? Whereas you might be buying that house once in 10 years, once in 20 years for some. Even if it's once a year, it's not every day.
No, and you don't know what you don't know, right? Correct. So that's the issue.
Rules and regulations change on a daily basis in this industry, as you know.
Exactly right.
Yeah.
The Smart Property Show is proudly brought to you by Search Party Property, nominated by REB as Australia's best buyer's agency and buyer's agent for 2025. Looking for your dream family home, a prime commercial property, or a smart investment? we've got you covered. Unlike others, we don't rely on selling agents or property managers. We have boots on the ground in key investment cities across Australia. Powered by data-driven insights, we give you the edge to secure the best deals. Ready to invest smarter and grow faster? Contact Search Party Property today for a complimentary discovery call. Moving into more strategy, I guess one of the trends we're seeing is SMSF borrowing.
Absolutely.
So a lot of people have reached their limits on their personal finances. A lot of our clients are, moving into their 40s and 50s, so they've got some really good balances in their super funds. Tell me a little bit about what's your advice around that? What are you seeing in the market around SMSF borrowing?
I've seen a huge boom. I'd say it's a huge part of my business at the moment as well. And it's not just business owners that are looking at this anymore. It used to just be business owners that will want to explore this option because you're not having...
Buy a warehouse, buy storage rooms.
Correct.
Yeah.
And now we're actually seeing that individuals are wanting to get into that space and wanting to actually prepare for their future, which is really exciting. Considering the average number of balances that clients actually have in their super is well below what they should have in preparation for retirement. And so it's quite exciting. Again, it's really important to build that team around you, behind you, right? You want your accountant, you want to get the right advice, you want to get your financial advisor on board. You want to be able to also potentially look at diversifying. It might not just be all property. You might want to put some into different kind of investments as well. Don't have all your eggs in one basket, as they say, right?
Yeah.
But with property at the moment, you've got the option of buying a residential property or a commercial property as an individual. You can borrow up to 80 to 90% on that property. And they don't actually take into consideration your current liabilities. So if you've got an owner-occupied or you've got multiple other investment properties, they are purely just looking at what's within your super fund.
Yep.
What's the contribution that you're putting in on an annual basis, a monthly basis, whatever that looks like. They're looking at the rental income that you'll get. And for someone in a position where they might have some spare cash and they're wanting to potentially even look at minimizing tax, they can put extra contributions into their super, which will actually allow them to potentially get a better property. Yeah.
I know we're not giving any financial advice here today, but in terms of what sort of minimum balances do your experts within the Entourage team normally suggest for your clients?
Things have changed a lot. There used to be a lot of myths. There used to be a lot more rules around the regulations and lending with different lenders, right? The major banks are out. There's a couple that might still play in the game, and most
really?
of them...
I thought they were long gone. And if they are, wouldn't they be like double-digit figures in terms of their...
Surprisingly not.
Really?
Surprisingly
I thought the top
not.
four are long gone, right?
Yeah. So they do play in it, not in the same way that other non-banks might play in it, but there are still options depending on your situation. However, the rules have changed where they used to say you have to have a minimum of 500 grand in your super, or a minimum of, you have to have this much left over in your super after. Things have changed. That's not the case anymore. So you can actually go in there with a balance of 100,000 if you can buy a property and, use those balances to be able to pay for your stamp duty, pay for your buyer's advocate, pay for all the costs to run. I always tell my clients it's always good to have that buffer to still stay in there. You want to make sure that you've got funds sitting in that account to cover any repayments for if the tenant hasn't been organised straight after settlement.
Well, particularly if SMSF lending interest rates are higher than personal.
Correct.
So if it's a negative gear property, which it probably would be depending on what they buy in this particular environment, they definitely need to have that buffer.
Absolutely.
Well and truly above that sort of, like you said, 100,000.
Yeah.
If they're getting, 20%?
Yeah.
Yeah. So you'd still need to have a good buffer there to ensure.
Exactly right.
Absolutely. We're normally seeing just our trend, and we don't give advice on that, obviously.
Yeah.
But normally in excess of that 250 mark is what we're seeing coming through. But that's because that's the age bracket too.
Of course.
Someone's in there, our persona client's 35, 45.
Yeah.
So if someone's coming in at that age bracket and they've worked for 20 odd years,
correct,
especially if it's a couple, you generally have those sort of balances.
Absolutely. And look, it can be a safer play. Some people also like to keep their industry super fund. So they might leave a balance there. And then they might set up that self-managed super fund so they can have a big chunk going and investing in property themselves. There's other clients that might go and, invest in shares instead and play around it with themselves because they're in the industry and they know exactly what they're doing. But again, this is their retirement funds. You don't want to be playing with that It's not.
You want to get it right.
Correct.
Yeah. And this is what scares us. We see people doing it and they'll go and buy an off-the-plan apartment.
Yes.
Which what dangers involved in that. Number two, then there's other funders out there who will, private funders, who will fund that property. So there's about $50,000 commission on it.
Correct.
Plus there's another $50,000 because someone's got to fund that one single contract.
Absolutely.
People don't know that at the time.
Yeah.
And they're like, no, we can get you that off-the-plan apartment or house and land package.
Yeah.
So it's heavily negative geared. It's already priced with at least maybe 50 to 100K extra on top. The vals get done, they can massage that because they would also offer the finance on it.
Of course, yeah.
But then you look 5 or 10 years down the track. I mean, these things aren't really going to grow.
No.
And it's going to take a long time to bridge that gap.
Bridge that gap.
And the depreciation opportunities, I mean, we're talking about 15%.
Correct.
Right? Outside of your super fund, and that makes a lot more sense if you're at 49%.
Correct.
Then there's some logic in that.
Yeah. So there's just so much opportunity, but getting the right advice is so important. I was actually chatting to someone this morning about a old client of mine that I used to help at the big yellow bank, and he had approached me because he was looking to get some assistance around her super fund, and he had gone to his relationship manager. Again, you don't really do a lot of this at the bank, right? You don't come across this. So she had advised him to go to his accountant and get some advice from him, which is normal. His accountant pretty much had told him it's really hard to get finance in your super. This client was probably in his mid to late 50s. So retirement's, coming up in the next couple of years or so. And he told him to pay cash.
Wow.
For that property. So he did. He didn't know any better. He thought, hey, I'm trusting my accountant. I've had him for many, many years. I've got a really great relationship with him. He must know what he's doing. So went and paid cash, came to me a couple months later and asked me how I can help him to potentially look at taking out some equity to subdivide and do some renovations and do a couple other things. And to his shock, he found out you cannot take any of that equity out unless you were to sell that property.
Yeah. And the subdivision and all these extra things you said, you can't do that with unless with the leverage. Yeah.
Correct. With the leverage.
And his cash is probably gone now, right?
Well, that's exactly it. Exactly. And it's quite scary because that's his future that you're now playing with. And that's why it's so important to make sure you're getting the right advice from everyone from a different perspective. Because I can only help you with the finance side.
Yeah. We normally say, look, especially from finance, accountants are great at what they do. And he's had that account for 20 years and done a great job. Yeah. But we often talk, make sure, just ask a couple of questions to your accountant.
Correct.
Are they property savvy? Have they got investment properties and things like that? Not that it means they should have 20 properties. It doesn't matter. It's more about understanding that they understand what you're trying to achieve. Absolutely. And that's probably the bigger point.
Yes.
Explaining what you're trying to achieve to your expert so they can try to give you the right guidance.
100%. And we see it all the time. There's accountants now that are trying to play in the mortgage broking space, and it's not something that they're doing every day. So they don't see all the policy changes and all the different regulations that are changing on a daily basis. And sometimes we see situations where a client might have gone to their accountant who said, hey, I can do your finance as well. And they're happy because they don't need to give them any more extra information. They've got everything. It's easy and simple, right? We had a similar situation like that recently where a client went and bought a commercial property, took a fair bit of time to get all the approvals. Interest rates are quite high, fees are quite high, even though this client could have had other options that might have been a bit more competitive. So because he didn't get the right advice, he now needs to pay stamp duty on a higher amount. Now, the reason for this is because when you don't have your lease agreement organized at the time of signing your contract, you now need to pay a GST amount.
Yep.
Now that GST amount will be refunded back to you from the tax office once you fill out your BAS or when you do your tax returns, right? It'll come back to you. However, that's cash flow.
Yep. It's a big chunk.
That's cash flow that you now don't have, that you could have avoided not paying.
Yeah.
If you got the right advice.
True. What are you seeing now? I mean, obviously we just heard the news around the Queensland government with their incentives for first home buyers and 2% deposits and throwing some other exciting benefits for new homes in Brisbane and Queensland. How do you keep up to date with all these? Because if you have investors coming to you and they're investing normally outside their backyard, how do you keep a track of all, A, those type of schemes, and B, what's your advice on for, say, a first home buyer to go into those type of schemes?
Great question. It can be quite difficult, right? But 40%, 40 to 50% of my clients are actually based interstate. I do get that the traction around the different rules and regulations and different stamp duty and government schemes that come around play. Keeping a close connection with your conveyancer can help because they know a lot of this information off by heart. And also just making sure that you're educated. I'm educated. I'm reading all those different updates that are happening, keeping on top of all of that, subscribing to different newsletters and journals and reading all that and being on top of it.
But they are tricky, right? I mean, a lot of them have little asterisks, which are terms and conditions, which, let's face it, the average punter isn't going to read. I've seen people get caught out regularly where the little asterisks will be, you can't buy in these postcodes.
Correct.
And, I didn't know that. So they've already gone and put an offer on something.
Absolutely.
And they go to you then to get the finance and they say, well, you can't buy in that postcode.
Yeah.
It's excluded from the banks.
Absolutely.
And that's not clear until sometimes you actually apply, correct? A lot of times the banks won't prescribe that until you apply.
And that's exactly it. And sometimes even after you've applied, you have to actually secure your spot in that. So you might have a pre-approval, but you might not actually have a spot in that scheme. So you need to make sure you've got that approval along with your pre-approval, which does come usually a few days after, but you need to make sure that you've got both.
I was telling a story the other day where when was that it must have been last year, the government, Queensland government again, obviously election time, there's always lots of schemes. Yeah. And there was I think it was $50,000, give or take. Yeah. And by chance, I rang a developer that day, a builder, building company, chasing up something for a client. And they were at the pub. I said, what are you guys up to? I said, we've just made $1 million overnight. I said, how did you do that? I said, the government has given out a $50,000 rebate, which has just increased our price of $50,000. So there's actually no benefit to the punter, but it gets some votes because they're like, what a great government. It's just given us $50,000 to buy our first home.
Couldn't agree with you more. We see it all the time.
It's probably why a lot of what I'm seeing as well is probably go back into the finance side. Yeah. So the next trend on that, because I think a lot of people have been seeing these come out. And there's obviously always a subset of market who would be happy to move in. And the government's obviously trying to push people into different areas, right? Makes sense. Move them into new home estates. Great for jobs as well. Construction industry, build more property, right? Which makes total sense why they're doing it. Yes. But people don't want to live an hour and a half away from the city.
Correct.
They're living in, South Yarra, or they're living in Bondi in Sydney, or wherever it might be, and they don't want to live an hour and a half away in a new housing estate. Yeah. And so we've seen a lot of people start to reject these offers. They think about it, they come and talk about it, and how do you feel about it? Well, we don't really want to move away. And so that's where the rentvesting term, which is, I know it's not new, but I've again seen that trend really kick in sort of double time. We've always had it. We've always talked about it since we started in 2017, and it's been something that a lot of our clients, personal people in the company have done it as well. Yes. But I'm seeing it really to have a new lease of life. And what we're seeing is with that probably more mature audience, yes, there's going to be that sort of first home buyer, but then they'll tend to buy a unit. Yes. But then they get stuck. Correct. Because they'll buy a unit and where they want to live, that unit won't grow for 10 years. So they actually can't take any equity out of that later to buy the family home.
Absolutely.
And I did that. And we've all been there 20 years ago, did that exact thing, which was a nightmare.
Every day. And even they say property doubles every 10 years. Not necessarily.
No, history will show that.
Yeah, not necessarily. It's the right property. Yeah. And the right property can double sooner than that.
Correct.
If, again, you've got the right advice, right?
Well, I read the headline today was at Byron Bay in New South Wales. It's 75% in the last 5 years. Yeah, exactly. And some of these regional hotspots have grown crazy.
It's grown massively.
A lot of that was the back of COVID.
Absolutely. With a lot of business owners moving up there. I know our boss moved up there just before COVID, started up an office up in Byron, just because the life is different. The regulations were different compared to Victoria at the time as well. Yeah. And you get to surf at 9 o'clock in the morning.
Exactly. Right.
It's a different lifestyle, but yes, absolutely. Rentvesting can be a powerful tool if used right. Depends on what you do with it. Depends on where you're renting. If you're paying $6,000 a month in rent, and then your borrowing capacity is now going to reduce as a result of that. But I've actually done so many scenarios with a lot of my first home buyers when they do come to me wanting to buy a unit or wanting to buy a house 2 hours away from the CBD, and I show them the difference of if they were to continue renting where they're currently living and going and investing that money instead, and perhaps not even needing the full amount. Yes, they do pay stamp duty. There are some other benefits that they might not receive as a first home buyer. Yep. But it actually allows them to get into a much better asset, something with land, something with growth, and something with the potential for them to actually be able to buy their dream home eventually. Yeah. not just a home as a stepping stone.
And we've had some pretty exciting markets in the last few years, right? We had the back end of Brisbane.
Yes.
We had an Adelaide go well. Obviously Perth boomed.
Yeah.
And now, we're buying a lot in Melbourne because we feel that's at the bottom of the market of its cycle. And so with a lot of those rent investors who did take that punt and say, okay, well, we give up. We're not going to live in Sydney and Melbourne and Brisbane. We're going to rent invest. We're going to rent where we want to live. And I've seen this with a lot of people with kids as well.
Yes.
So, we want to put little Johnny and little Sarah in this school. And so we're going to stay here. We're going to keep renting in a unit in a nice area, and we're ready to go. So they'll end up buying 2 properties with us. And what happens, we've had this such great environment and we've been able to buy well and the market's done well. So they've created such fast equity growth that, they can either buy 2 because they've had maybe 1.6, 1.8 borrowing capacity.
Correct.
And then they can either roll again. So a lot of them are now saying, well, hang on, this is okay. We're okay to rent.
Yeah.
We might look for that dream home
down the track.
Maybe high school.
Yeah.
That's when we need to really maybe put some roots down somewhere. Yeah. And so they're going again and now building these little portfolios, which they'll either use to accelerate and passive income, or they will use that to then buy their family home down the track.
Correct. We see it all the time. We've just about to settle a property for a client of mine. He actually works at a bank. He's still chosen to use us as a broker. And I love stories like that because it really shows you the value of what a broker can do. It's
actually not uncommon. The amount of times you talk to someone and say, when you start getting the fact finder and where do you work, where does the wife work? And you're like, oh, you work at a bank. Yeah. Oh, yeah. What about you? Don't you get a discount?
Yes.
Oh, yeah. It's not worth it. I can get better outside.
And sometimes you can actually still secure those discounts for your clients, even through a broker.
Right.
Even so, you can be bank staff. You can still get those great discounts, which we have for this particular client of mine. We've been able to use a 10% deposit. The client doesn't need to pay any lender's mortgage insurance.
Really? Is that due to relationships of your buying your lending power with a certain bank? Is that the reason you can do that?
Not necessarily. It's actually just the standard rules that some of these lenders have, which is fantastic for clients because they now get to leverage that. He gets to put a 10% deposit down. He doesn't have to pay lender's mortgage insurance. He gets to pay a really competitive rate, which allows for him to maximize his cash flow as well.
Yeah.
And on top of that, we've been able to secure him his second property now within about 7 months using the equity. He hasn't put any cash of his own.
Where are you seeing? I mean, I could talk about property and trends for hours, but what are you seeing just in the last, let's say this year, almost up to half the year, 6 months? What have you seen this year? Where are people buying from an investment lens?
I definitely have seen that trend coming back down to Victoria at the moment, absolutely. Whereas a couple of years ago, the last 5 to 7 years, it's definitely been the people that go in really early in WA. They've done really, really well. I can see that quite clearly. Yeah. Queensland's been another hotspot. There are other spots that people are starting to get into.
Queensland did very well too. Central Queensland for a lot of our clients. Yeah.
And look, again, you need to make sure you get the right advice because I have seen people that have bought in regional parts of Queensland or even in regional parts of WA and they haven't done well.
No.
Because they have bought somewhere where they think, oh, I've heard Perth is great to buy in. And then they just go and buy anywhere there. Yep. And they buy a unit or they buy something that's in the mining area, that's directly in the mining area. And if that mining spot shuts down, there's nothing else.
People say, what's the market like? Well, the market's booming. Well, a market's a big word. There's only very few. I mean, even in Melbourne, we're buying a lot in Melbourne at the moment.
Yes. Yeah.
But only in a very few areas.
Correct.
We're not buying it in every suburb in Melbourne.
No, definitely not. And that's the thing. And again, comes back down to the advice. It comes down to your goal as well. What do you want to do with this property?
Yeah.
What do you want to do in 3 years' time? Do you want to actually buy an owner-occupied property down the track?
Yeah.
If so, the risk appetite now changes because you need a property that might have a short-term growth as opposed to a long-term growth. Something that you might be able to manage your cash flow still so that you can still save for that owner-occupied property.
Yeah. What do you see? I mean, if you look at the statistics of investors again, what is it? 78% investors only have one property.
Yes.
Right. And we kind of say, well, that's because they're normally buying where their mum and dad tells them to buy.
Correct.
Or they listen to the friends at the barbecue and they get stuck because they'll buy that high-rise apartment or whatever it might be. Or they just don't know how to keep going.
Yeah.
So they might buy well, but they might just not know how to keep going. Then you're getting up to 4. I think that's 2% of the Australian investor market.
Yeah.
4 properties. And you're like, I don't feel like I'm the top 2% of Australian. And then you get to 6 and that's at 0.09.
Yeah.
And so people at 6 properties going, I'm working so hard. I don't feel like I'm in the top 0.9% of Australian investors, but that's what the numbers show.
Yeah.
What are any thoughts at how we can help clients from a finance perspective? Buying is different, to get from that, maybe 2 to 3 to 4 and increase from there? Because you probably see, especially if they come with what we see, especially if they have a house already.
Yes.
They've got equity
Well,
in most places.
That's a huge one on its own, Julian, because a lot of people don't actually know they've got access to that equity. So unlike super, a property in super, if you've got $1 million house and the bank allows you to borrow up to 80%, right? So 800,000. If you've got a loan of say 500 grand on your mortgage, we've now got 300 grand worth of usable equity that we can take out, give you the cash, and you can go and buy a property with it.
Yeah.
You can also do other things with it, but ideally you want it to be working for you, right? You want it to give you that growth so that you can secure the next one after that. And you can keep doing that. And that's what a lot of the investors are doing. And that's what I'm seeing, is that at one point they stop using their own cash. They're just leveraging the bank for everything.
Yeah.
And the costs and the charges of buying an investment property, you might also get those tax benefits on the other side.
Correct.
So there's a lot of different benefits that you have. And a lot of families, right, young families might have bought that unit to begin with. Now they're needing to buy that next property. There's so many ways to still use that equity and get the right advice to make sure that you're doing the right thing, to then go and leverage that again and then leverage that again. Now, structuring it can be a huge thing. Structuring it, the way that you buy it, the type of entity you buy it in, whether you buy it in your individual name or if you buy it in a trust structure, that can also come into play. And different lenders have different
even on individual
regulations.
names, do you 80% in your name and 20% in your wife's name, or vice versa? The wife's got a bigger income, it's better to have it under her name.
Correct.
There's risks on both sides. If you lose your job, then But these are all the questions that should be asked. Or if you don't ask because you don't know, you'd hope you're getting that great advice from your experts.
It's about making an informed decision. There's no right or wrong answer. Sometimes there can be.
Yeah.
Sometimes there definitely can be. But it's about making sure you've got all the information in your hand and you get to make that choice at the end of the day. Your accountant's not going to tell you this is what you have to do. They can advise you these are your options, but you need to be the one to make that decision. And so really you do have that power in your hand because you've got all these people around you that are wanting to help you. There's so many ways to be able to get yourself from that one property to the second, to the third, and we see it within 12 months' time even. One of my clients, she bought her first property about a year and a half ago. We've settled her third property about
Wow, that's fast.
2 months ago now.
Well, like you've said, if she's bought in some of those areas you mentioned,
correct,
where they were making 20, 30% in some years, then you can escalate quickly.
Absolutely.
I think that's one of the, dangers I sometimes see, and just talk people just to think through it. I'm not saying anyone's right or wrong, but there's a lot of people out there who I think someone just announced they bought their 100th property, investment property. And that's great to say that. But most of those properties are going to be units.
Correct.
Right? Very low value units. So, which is fine. If that's your strategy. So go back to your word, the strategy.
Yeah.
If your strategy is low purchase price, it's got to be high yielding because I don't earn a lot of money.
Yeah.
I can't have negative geared properties.
Correct.
That's okay.
Yeah.
But I guess to me is to, sometimes it's that ego. Correct. I have 10, 15, 20, 30, whatever properties. That's an ego play. For me, it's like you can get to your target. Let's say it's $150,000, $200,000.
Yeah.
Of passive income at retirement. We can do that in 4 properties.
Yes.
So we'd rather say, please, much prefer to, be better for my business if you bought 50 properties off me.
Of course.
But, you can achieve your goals if that's your goal. Yeah, if your goal is an ego-driven goal, no problem. Some people say, I want to buy 10 properties by X age.
Yeah.
And when you ask them why, there's no reason.
There's no reason.
It's just an ego thing. It's just a number, which is okay. As long as they're clear on that's why they're doing it.
Exactly. And I can't imagine anyone wanting to manage 10 properties.
They don't know that until they get there though,
Correct.
right? You don't know that until you get there. And
mean, if you are buying the lower entry priced properties, the quality of the tenant is also going to now change.
Yeah. Which
means potentially more cost out of pocket that you don't expect to see.
Yeah, you're locked in a lot of, look at the laws that have changed here in Victoria, and a lot of laws of Queensland had some quite a lot of changes in the property management side. We've got a property management business in Queensland, and it's constant changes there.
Exactly. And like you said earlier as well, the return, the cash flow might sometimes be a lot stronger with your, lower entry units. However, you've also now got to add body corporate in there and other expenses that you might not have had if you bought an established property.
And then you get a sinking fund and you're like, hang on, I can't pay another $500 a month on top of that. Yeah.
And there's a lot of surprises that a lot of clients get given, and they don't expect it because they've just thought, hey, I've got the money, I've got enough, I've got capacity, I'm buying for way less than I should be. But that's not necessarily the right.
I think that's why it's great that you spend the time with the client, getting to know them strategically, but also understanding their mindset.
Yes.
We've had a client, I'm sure they made $150,000 in the first year.
Yeah.
Their property, which is great. They're so excited. Their first property.
Yeah.
But when I went to talk to her about this, the wife, about it, she actually complained that she had to change a shower head and a bathroom sink or something. The back door got rain damaged. Like some people are talking thousands of dollars of repairs and maintenance in that first year. She focused on that, which is very upsetting for her.
Yeah.
As opposed to the $150,000.
The $150,000.
They've got 3 properties now out of that.
Yeah.
And she now understands, but back then that really affected her, those repairs and maintenance. And this is an older home. Yeah. We bought it with the strategy of, it was weatherboard. The strategy always was going to be to subdivide it.
There you go.
12 meter wide, 800 square meters of land. It's in the Central Coast.
Yeah.
And the idea was potentially either subdivide it or put a granny flat in there.
Yeah.
Both options were easy to do. And we're well on our way, but it's just the interest. It was an interesting play for me to say, okay, well, I didn't understand their mindset at that time.
Correct.
And that was their first investment property. So it was a new thing for them as well to understand, there are going to be repairs and maintenance in an older house.
I mean, we see it, that's one of the questions that I ask, right? What are you actually comfortable with spending on a monthly basis in terms of that gap between your repayments, your holding costs, all of that minus your rent? What's that gap that you're actually comfortable with? And there are some clients that are happy to pay a huge gap there. And that's because they know the value of potentially getting a lot more growth as a result of that lower net yield that they're getting.
Excellent. Well, Kat, thank you for your time.
Appreciate
there's
it.
Lots of nuggets there for our listeners. And
Absolutely.
I really appreciate you explaining how you take a client on board, particularly the strategic approach, which is music to my ears to hear that's the way you approach finance and I guess your growth of your clients. So we'll put your details in our show notes because I'm sure a lot of people would like to have a chat to you.
Fantastic. Thank you so much, Julian.
Good to see you.
Really appreciate it.
If you enjoyed the show, it'd mean a lot if you could take a moment to rate and review it on your favourite podcast platform. It really helps us reach more listeners like you. And don't forget to hit subscribe so you never miss an episode. The Smart Investor Show provides general information and commentary about property, finance, and investing. It does not constitute financial, legal, tax, or investment advice tailored to your personal circumstances. Before making any financial decisions, you should seek professional advice from a qualified advisor. While we aim for accuracy and quality, we cannot guarantee all information is complete, up to date, or free from errors. Past performance is not a reliable indicator of future results. Thanks again, and I'll catch you next time.